Hey guys, Future here of FutureMeDead.com. This is the third video update on ticker AAPL, that's Apple. Last week, Monday and Wednesday, I made two videos with forecasts with regards to price and explaining the technical environment that we're in with regards to this stock. If you haven't seen them, I'm going to drop the links below in the description box. Go ahead and take your time and go through them in order, so that way you can be up to speed with what's going on and the analysis at hand. So we've completed an impulse wave to the upside in wave one. In the last video, I was looking for price to immediately go lower. And let me play an excerpt of that video. But it's not going to be a straight shot up there. There will be corrections along the way. And I do believe we are ripe for a correction. Now, there are three reasons that I want... Okay, so corrections along the way. We've certainly got one here. We have an A, B, C to the downside. Funny thing is, you see this candle here, and I believe it was accompanied with some pretty significant volume. Some people are calling it a bit of a flash crash, but when I zoom in using smaller time frames, what I see here is perfectly explained by Elliott wave. We have the first leg down in A triangle in B. That's wave A, B, C, D, E. Completes wave B. Thing about triangles is they always conclude with a thrust, and this explains the price action in the last trading hour of the last session. So the $1,000,000 question though is this all of the correction? I'm inclined to say no. I believe that this is only wave A of a larger correction, of a larger ABC. This rise here of today may be all of wave B, or it can go a little bit higher should it want to. It's not a requirement for it to terminate here. It is very nicely testing the apex of this triangle, which I've been seeing a whole lot of lately, not just in the stocks but in the forex market as well. Apexes always provide support and resistance, so that's been satisfied here. But moving on, let's why do I think this is only wave A of a larger ABC? Well, let's turn over to the broader market. Let's start with the Dow Jones. The Dow, we're looking at hourly candles with a range of 30 days. On March 12th, the Dow Jones, the S&P, Apple, they all made this bottom and have been rising together. Now, the Dow Jones, although sharp, is rising in a pattern that's called a double zigzag. You can see that here, A, B, C. This completes the first zigzag, so we label that as a W. There's always an intervening X wave. You can see that here, followed by another three-wave structure in the same direction as the first zigzag. So here we go, A, B, C to complete wave Y. So this is why I stated earlier, I do believe this rise is part of a correction, which prompts me to label this as a B wave. Moving over to the S&P, same thing. Sharp rallies, but there's overlap, and this is just simply not an impulse wave. What that means is this rise is not part of the larger trend. It is part of a counter trend pattern or move. I don't know if we're gonna drop below the beginning point of this structure. It's not required because I don't know. It's too early to tell which pattern is underway. If it's a triangle, well then these lows would certainly hold. Moving on to the Nasdaq, this is the only one that sports a clean impulse wave to the upside, and that is because it is relatively stronger than the S&P and the Dow. Very much like Apple. Apple also sports an impulse wave to the upside. However, this is a completed impulse wave. Once we have 5 waves in any direction, up or down, we are to expect a 3-wave counter trend move. So this is what I'm expecting. I think this correction here, this 3-wave structure, is too shallow of a correction to correct this sharp move up. That's observation number 1. Observation number 2 is we haven't entered the area of the previous 4th wave of 1 lesser degree, which is this small triangle here. Triangles are considered consolidation, and they always provide support and resistance. And observation number 3 is the fact that this triangle here coincides with this previous resistance here, which should provide support now. That would be the most ideal stopping point for this. Certainly it can go lower. There's no rule that dictates that's, it's going to stop. But this is where we would have the first opportunity for the bulls to take control. Okay, so let's get back to Apple. And let's zoom out to the hourly chart. Basically the first chart we were looking at. So I am counting this as a wave A. We're working in B, and I need a new low in wave C. Now, the ideal stopping point, what I'm looking for is, number one, I want this gap to be filled. It's filled at 124.95, excuse me. Call it 125, which also coincides with previous support and resistance here. Below that, we have the 61.8% retracement level of wave 1, which is a guideline of Elliott wave. Basically tells us that the most common stopping point for second waves is in the area between the 50% and the 61% retracement level. So it is a buying opportunity, but I do think we should be seeing short-term weakness in the next or 2 trading days. So that's it. You guys know where to find me, FutureMeDead.com, or on Twitter @FutureMeDead. Good luck.